Welcome back, Rohit.
Hi, Dale. Hi. Good
And
evening.
Blake's here. You're making us famous.
Good evening, Rohit. Good to see you. And I'm gonna turn it over to Dale.
Yeah,
Thanks,
Dale.
Blake.
You're
All
doing
right,
a
team,
bit
have a great weekend. Feel better, Stell, you and your family. Steve, have a good weekend. Ryan, nice work all week.
Cheers, Dale.
Crystallized. And Blake, you, as always, great ideas every day he gives away. So, Rohit, want to share your screen so we could see what's on your radar? Pretty interesting day yesterday, huh?
Oh, very, very interesting.
Yeah. I know you're going to disappoint me and say the dollar hasn't topped yet. Correct?
That is the fight. That is the fight.
Okay. So here's some information. Rohit, one thing I admired about him was he flipped when he saw the inflation coming back to the market and risk on. So we've been talking for years, and then he flipped the other way and became bearish when his cycles and his Elliott work turned him negative. So you're not perma anything. You're flexible. You change your mind, as W.D. Gann says. If you don't learn how to change your mind, you won't have any change left. So what's on your mind going into this, scary month of October? Should we be scared or aggressive?
That's I think the most important question. And with history holds with so many big sell-offs in October. Yes. Too many people are positioned and prepared for a market decline this October.
Okay.
And probably that's the reason why it might just get pushed ahead a little bit. So I'm not writing off the end of a bear market, but what I am saying is that we have a setup that can result in a near-term rally in equities that could be pretty stimulating. So, so at least for the month of October, the worst may be done.
Yeah, I've seen some positive things about October. I've seen midterms, seasonals are positive, and end of quarter stuff coming in. That there have been turning points on, which this time frame points to. So tell us what your case is. Is it going to be some type of flat, where even though we took out that recent low, the June low, that we could recover all the way back to 4,300 SPX?
Yeah, so I'll just go through these initial slides. Actually, this is the title of the long short report I wrote, and this was at the beginning of September, when the markets were still closer to a slightly higher level, and specifically in India. So when I'm really comparing India with what is happening in the US, we've actually been a much stronger market and fighting back and rallying every time. Valuations remaining much higher than they are in the US, and which is why I actually have to talk about the FOMO even more out here than you would in the US, because moment the market rallies back, so the Nifty has been going back to 18,000, and everyone gets the fear of missing out. They start feeling that you're missing something. Looking at world markets, we should just ignore everything and stay invested in India. And so that was sort of the fight that was having at the beginning of September. And that fight has not completely gone away, even with all the fears that have come in with global selling through September and into early October. We are seeing strength, some kind of strength still, meaning that our markets are still at a much higher level than the US.
Your markets can make new highs here without the US.
Yeah, there is a chance. I'm still not betting on new all-time highs, but definitely a slightly higher high than what we've seen in the last 2 months. So that's what I'll get into. So I actually try to explain to people that when we talk about markets, we think about greed and fear.
I like that.
Fear is actually the bigger thing that's really been our botheration, because when we say fear of missing out, it's not greed, it's also fear. The fear that you might not make money, and so this fear actually is what gets us into trouble all the time. So
you know
anyway,
what FAIR is an acronym of? False evidence appearing real.
Wow. That is nice.
You could use it. I get a buck every time you use it though. I get a rupee. The cash.
A rupee is now at 77 rupees to the dollar. So it's going worthless.
I have to raise my wagers with you, buddy. Okay. Anyway, yeah, I learned that a long time ago. It's not original, but I think it really, when you think about it, it is. It's false evidence appearing real. In our minds, it's real.
Okay, so two markets I'll talk about. While we'll talk about the SPX, I'll try to draw the analysis from the Nasdaq because of the much clearer wave structure. And I'm starting by looking at the monthly chart. And I'm actually trying to compare what happened on the monthly chart, say in 2000, where it was going on upwards inside a channel. And then it had this final throwover moment, which then finally popped the 2000 bubble. And then we saw the big sell-off. Right. And I've also plotted here is the 40-month average or 50-month average. I typically use 40, but 40-50 is a fair argument. But essentially, what I've seen is once we break that, we sort of ended that particular trend. It's sort of a confirmation. And we've had a very similar pattern from 2009 onwards, where we were not breaking the 40 or 50-month average, traveling inside this long channel. We did get a throwover in 2021, not as massive as 2020, but we have given up that. Sorry?
It hurt if you were short.
Yeah. Yeah, it completely hurt if you were short. Yeah. But we have given that up. And so that part has popped. So have we really popped a similar bubble is the question I asked here. We have also closed last month below the 40 and 50-month average for the month of September. So that's an additional confirmation that maybe worse is lying ahead. And then we move into the wave structure to see whether that really supports these arguments or not. And so this has been my breakup of the entire structure. The fall that we've seen from the January or let's say November top, between November and January, I think all the US indices peaked. So I've marked it as a 5-wave decline in wave A into the low of June. Then we've got wave B bouncing back. And then we've started wave C down from there. The difference between Nasdaq and SPX is that, or Dow also, is that the entire leg A is actually overlapping in the Dow and the S&P, which is why I've drawn this wedging line, which essentially is what we call a leading diagonal. Right. And so if we have a leading diagonal, so I'm going to write that here. What is the significance? Now, what I have seen during bear markets in so many stocks is that when leading diagonals occur, then often wave C happens very, very fast, sometimes in 1/3 the time, and sometimes up to 2 times, 2.618 times in Fibonacci terms, the size. So that gets me to believe that we've started this, larger degree decline in the US indices from the high that we've made in September. But what we have completed here might just be wave 1 of that decline. So while we are looking at much lower levels, we're thinking, say, the Nasdaq Composite here goes back to, say, 7,000, which is almost the low that we made in 2020 eventually in wave C. In the next chart, what I'm showing here is, sorry, 1 second. Yeah, is that we have completed a 5.
The NAS 100 or just?
No, this is the composite. It's the composite.
Composite. Okay.
So the composite here has completed a 5-wave decline into yesterday's low, capitulating this move. And what should then result is, in the near term, a potential 61% retracement of this entire fall.
Got it.
Of course, it can end even at 38% near the wave 4 low. I was just looking at 2008 wave 2 of C, very, very simple. In fact, there's a lot of similarity in the wave structure between 2008 and what is happening right now. Wave C, or 1 of C got retraced 61% in the Nasdaq, but only 38-50% in, say, the S&P or Dow. So they were much more lethargic. The Russell was much more stronger in terms of bouncing back, even more than
Why do
60.
you have a horizontal dotted line up at 15,000? Is that if the count changes and takes out the B high?
No, it's just come up. It's just the 161%. I was not really trying to say anything. It's just there.
Okay. And it would be your bull bear line that the count changes if we take out B?
The count would change if we take out the high of B. Yes, surely that is correct, because we are if we are thinking this is 5 years down, the violation is at the high of B.
Change of picture.
Yeah.
Okay.
So in the next few weeks,
because I mean, you're like a lot of Ellioticians. You always have you have a preferred count and you have an alternate count, right? And this is your preferred.
Yes,
correct?
That's right.
Okay. Okay. What would your alternate be?
The alternate. Okay, so that's a good question. Now, I actually have to open the chart here.
You know, blame it on my astrological sign. I'm a Gemini, so I want to. One of me wants to know the preferred, and the other one wants to know the alternate.
So the alternate would be to think that the entire move that we have seen. Let me try and take a weekly chart. Now, this is the SPX.
Yeah,
that the entire move that we have seen is actually a complex correction and not a 5-wave, and is actually looks something like this. Okay. Now this, if I take this scenario, what I'm saying here is this is W, this is X, this is Y, this is X, and this is Z. In which case we've probably seen an important bottom. Does it mean the bottom of the bear market, or it means a much larger pullback and a lot of time, before we really see another leg down?
Yeah.
So this would be a much more bullish count if we really take that the entire structure is a complex corrective, in which case it's actually complete.
Okay. Thank you. Appreciate it. See, so I bring in to share your ideas, but I gain so much out of being able to talk to guys like you, Rohit. Appreciate it.
So what I look out for now is at least a 50% and maybe a 61% retracement in the US indices. Specifically, I'm talking of Nasdaq going back to 11,984, and that's the Nasdaq Composite. And following that, we will see 3 of C down. So that would be the next major leg.
Big wave.
Yeah, that's the big one. That's really the big one you don't want to miss if we do roll over from here, because it would be much bigger than one itself. Usually the largest leg of the bear market.
Okay, and does that kind of carry us through into early next year, time-wise?
So time has always been the tough one, but if I look at all these moves, counter trend rallies have lasted anywhere between 3-5 weeks. So the next leg down could start as early as even November, or late November, or maybe December.
Yeah. So finishes it off by the spring anyway of next year.
Now, what really supports these case of these bounces is somewhat the positioning. That is one part. So I'm just looking at the CFTC S&P futures being short. And these shorts have actually built up since, I think, May, June, when the market really started to sell off sharply for the first time. And then through the August rally, we really did not see these shorts really come off. They actually increased. Wow. And they've only come off in the last 2-3 weeks. And even then the market's fallen again. So we still have this large short positioning, which sort of creates room for these short covering rallies. So this is one data point. But when we actually look at the big picture, I've also seen entire bear markets continue with short positions remaining till the late stages of the bear market. If we actually look at, say, 2000 or 2000 and 2008, in fact, the entire initial part of selling came with short positioning inside the market. So, but you can have multiple rounds of short covering when you have a big position standing out there. So this is one point which supports it. The other is purely a technical point, the number of stocks below the 50-day average. And if that's really dropped to less than 10%, so this is in percentage terms at the bottom, So that's a pretty low number. It shows that a lot of stocks have fallen together and creates a technical oversold condition. So I've just shown some history of various points at which that happened and subsequent rallies that have followed these extreme readings, including the most recent rally from June here, which was a nice 15% rally, and we have that reading again. So that's just in
built
support
a case for a pop here.
Yes. And the amazing thing is, while all that is happening, like I said, now this is the Nifty, this is the Indian index, which has actually held up above the June lows. So till the June lows, it was making lower lows and lower highs. But from there, it's at a much higher level than the US markets. The interesting part is when I've tried to count the internals of this entire rise, I can't fit an impulse, which is why we have still put an X on top of it. And we are still thinking that it's a counter trend move and we'll eventually see a sell-off with the US indices. But right now, the short positioning, so we had a huge short position in the Indian market as well. We do get similar data like the CFTC published by the National Stock Exchange, and we call it the participant wise data. So they give you client and institutional holdings. And the institutional level shorts were at one of the highest in since 2020 out here in June. So that made a good case for this rally that occurred post-June. But the funny thing is that even now in this small little sell-off, we have a significant short positioning that has built up on the institutional side. And even more interesting, on the opposite side of this trade, you have a large long position from the opposite, which is the client side. It takes the opposite side of the trade. I'll just show a chart too, which really highlights this even more loudly. So these are the shorts, and simultaneously on top you see the longs, which is essentially HNIs, and we would think it's retail, but it's actually I don't consider it retail. I say that this also includes corporates, HNIs, and a lot of the smart money, and which is why every time we've seen significant long positions by the hands out here, we've actually seen market lows. And whenever we've seen shorts by the institutional hands, which may be hedging also to some extent, we've actually seen market rallies. And that's the setup we have right now, very similar to what we had in June. In fact, the client data is actually higher than what it was in June, which means even more long. And so that's pointing to me that this pop could be a little bigger than just a retracement for the Indian market. One, it has held up much more. And if US markets rally, it creates a case of not just a retracement. So initially we thought, okay, retracement 61% is 17,600. But what I'm not ruling out, and I cannot say I'm 100% sure, is a new high at least to this point. So I'm thinking in terms of an expanding pattern. I'm not saying an all-time high, which would be above 18,600, but even if we go to this top line, we would be closer to around 18,200, 18,300.
Megaphone drives people crazy because they get bullish at the top because it's a new high.
Yes.
And they get bearish at the lows because it's a new low. And it's just a disorderly pattern. Right? Megaphones.
Yes.
Okay.
And so the positioning, so that is why I've put two alternate wave counts now here showing the entire rally's corrective. It's pulling back. Initially, it can either be an X, which means only 61%. And the alternate scenario would be that it goes into the megaphone.
Okay. Got it.
And with that, I come to the dollar index, the big debate. Is it really over? And when I look at our own currency, the Indian currency, I actually don't think it's over. And if I look at the long-term breakout, I find it hard to believe that it's over already. Though we can argue now, we have seen, there are multiple sentiment extremes, and as in any bull market or bear market, all you get at once you reach an extreme has been a pullback. We've really not gotten more than a pullback. You had 92% DSI, the daily sentiment index, got a consolidation, rallies again, you get high readings, again you pull back. And this has just gone on and on and on. So where do we really call it a day? And so while we can argue that, okay, we can mark a 5-wave from the low in May, which is why some people have started to look for a top. The fact is it has so many multiple extensions that I can still keep adding 4 more waves and keep going on and on. So in extensions, we say just add 4 more waves. So you can go from 9 to 13 to 17 to 21 till we really get a reversal. So what I would say is, why not wait for at least the 20-week average to break? Because throughout this move, you sort of held the 20-week average. We haven't really
Where's
broken.
it coming in? The 20-week.
Yeah, I'll just give you the number.
Around 110.
Yeah, it's 107.83 right now.
Okay.
So that gives us a lot of room.
Yeah, I would take that trade down to 107. Okay.
Yeah, if that happens, yeah. So that gives us the trigger for a relief. I think short term, the dollar should consolidate. We've seen an extreme reading. The only thing to wait for is, will it break that before calling a longer term reversal? And
well, that kind of ties in, Rohit, don't you think, with the relief rally in the market?
Yes.
The dollar pullback and maybe some type of relief on rates that, the yields come down a little bit.
Yes, that's right.
Okay.
The bond chart, though, is still not showing a perfectly completed fifth, but it is somewhere in the fifth, so it should be close to completion of this particular leg.
This
so
is right here.
No, so this is again the dollar index long-term chart, because I just wanted to highlight, given that we've broken out from such a big sideways consolidation, we can't really end it here. If I just take classical technicals, measure the size of the breakout, it points to 123, 124. So I would think that it's possibly not done here.
Yeah. Not it's probably just, so everything is just we're set up for counter trend action across the board, and then sometime early December look for the trends to reassert themselves going into 2023.
Yeah,
how's that fit with what you're talking about?
Yes.
Okay, thanks for the narrative.
So I'm moving on to the Indian currency. That's the USD INR. So the rupee versus the dollar. And it's been heading higher, which means the rupee's been weakening. And it's been in a bullish trend since 2007, where it did, so we had a bull market in India 2002 to 2007, which is where the currency saw an ABC decline, where, which is USD INR saw a decline. So the currency was strong. And then since then, seen several bouts of, declines. I actually thought at one point of time when the, COVID rally, sorry for this. Yeah, when the COVID rally started, that if the dollar peaks because the dollar was falling, then we may complete a 5-wave advance, 1, 2, 3, 4, and the fifth may just complete here, and maybe you would get a larger pullback. What's ended up happening during that year 2020 to 22?
Just moved sideways.
Yeah, it just moved sideways and became a consolidation. Yeah. So I've eventually taken this as a running flat in wave 2. Okay, and it's kicked off a third wave. And this third wave, even if it's equal to wave 1, points to around 87. If it's extended, points to almost 96 to 97. And so that's created a lot of room for upside, apart from any short-term pullbacks. And which is why now if you've gone into 1, 2, 3 on a long term, it's not going to end, at least for the Indian rupee. It's likely to get much worse before it gets better.
Okay, so let me ask you, is a weak rupee and this move that we're, has been ongoing, that's accelerating now, a problem for the economy?
So it is definitely a problem for what we call is we have a current account deficit, which means we are net importers. So having that twin deficit, as you call it, we do have a twin deficit problem. We are net importers. We do need capital, and most of our funding is through portfolio flows into our equity market. We don't have, we've had FDI, but it's not like China. So in that sense, and we are a net importer of big time oil. So which means the number of months of, the number of months of currency we hold is relevant, and therefore, and with exports falling, if there's a slowdown in the economy, that affects the flows of dollars into the country. So we are seeing a net outflow, And what the RBI has done, why the currency was strong for a long period of time before weakening, is they actually put up $100 and $100 billion for sale. So we have a total reserve of around $600 billion. They just sold $100 billion over the last year to keep the currency from weakening too fast.
Okay,
but that I think is done.
Yeah,
Sorry.
I mean, I've been, it kind of tells you, unless when one nation tries to do it on their own, for it to work, our Treasury and the Fed have to get behind a move like that to bring down currencies. For Japan, except so far the UK has stopped its slide, but yeah, need concerted intervention for the dollar to turn. And what's going to be behind the dollar turn anyway? Once we finally get to whatever the highs are. A depression? I mean, what do you think will turn the dollar, even if we go to 120? What's it going to confidence crisis, geopolitical? How about the Saudis? Since we're at kind of have a cold war with the Saudis now after the OPEC decision, tit for tat, they could not just price things in dollars, they could price their oil in yuan.
Yeah.
But I know you're a chartist, you're a technician. So, and the charts are right. You go with them. So, we're right around top of the hour. Anything you want to wrap it with, Rohit?
So the last part, I think, which you mentioned, bond yields. So even our own policy from selling dollars is moved to start raising rates. And so we've stopped using, currency sales to manage the currency. We're raising rates. And which is where I think bond yields in India also go down a lot more. I'll just try to open the...
Okay, so yields are falling there and the currency is weakening while that's...
No, yields, now they have started to rise. Yields in India as well are rising. So they're not falling, but slowly, very, very slowly. I just want to open the US 10-year and then...
Bearish gold and silver, Rohit?
Yes, for the time being, yes. So this is the gold bugs index, which is the miners, already back at this trend line. In fact, if I push it up a bit, it will look broken. If I keep it to this point, then it's about to break. Not a pretty picture, because if that happens, then the marking goes to a big ABC, and that means the miners take a big hit to the downside. So wait, there is the 10-year. I did have it open. Yeah, this is the US 10-year. So, on a very, very long-term basis, we're seeing very clear impulsive declines. I've marked 1, 2, 3, 4. What I'm not sure of, do we complete 5 here and we get, some kind of a larger pullback? Or is it just going to be 1 of 5? Because in each of the early waves, this is subdivided into 1, 2, 3, 4, 5. This is also subdivided. Then why not the 5th also subdivided into 1 of 5, 2 of 5, 3, 4, 5? It's a question mark. I don't have the answer yet. But it does look like at least near term we'll complete 1 leg down, because it's a pretty long leg. And if I move to a lower time frame and look at the wave subdivisions, we can come close to an ending point, but still no confirmation that it has really reversed.
Okay. Well, I want to thank you again, and look forward to hearing from you again at the Trader Summit.
Thank you, Dale. Thank you a lot. Thanks a lot.
Yeah, I really appreciate every time you're around. I know I could ask you anything and you'll answer it, and given me a lot of clarity today. I'm sure everyone in the community, Marius, is saying thank you. Richard Adams says Ukraine peace talks could change a picture. Okay. So we'll see. But you guys should follow Rohit, at least on Twitter, at India Charts, and sign up for our summit. And I'm sure he's going to have some more material. He's going to have more time to share it. So Rohit, my trading warrior brothers, thank you for all your views and your giving spirit to share it with us today.
Thanks, Dave.
Okay, everyone. So that's a wrap. You could join the team in 11 minutes on the Morning Edge. Remember, have a great weekend, and always don't just count your pips, count your blessings. Have a great weekend, and we'll be back here next week to lay it on the court for you guys again. Thank you, Rohit. See ya, everyone. Have a great weekend.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.